Good morning, Bitcoiners, and welcome back to your economic calendar, the news and analysis you need to start the week off right in Bitcoin. I'm your host, Mauricio Di Bartolomeo, and today is Tuesday, November the 29th. So as we enter into the last trading month of the year this week, which is December, we want to spend some time in today's issue looking at what could be up ahead for Bitcoin for the remainder of 2022. We do have a Fed meeting lined up for the month. We have some potential negative macro headwinds. There's some headline risk as well, given all the events that have been unfolding in crypto so far. And we're also going to be looking at Bitcoin's on-chain metrics to get some clues as to what we could expect to wrap up the year. So grab your coffees. It's going to be a great one. Now, before we got going with today's show, we did want to once again remind our clients and viewers of Ledn's interest rates as of December 1st. If you are a Ledn client, you already got these in your inbox, but here is the update nonetheless. As of December 1st, interest rates for BTC will be 5% APY up to 0.1 Bitcoin and 2% APY for balances above 0.1 Bitcoin. On our USDC savings accounts, the interest rate remains at 8% for all balances. And we're also going to be updating our Bitcoin-backed loan rates and our B2X loan rates to 9.9% interest. That's a 11.9% APR. So again, you already got these in your inbox. You can also check these out on our website for the rates as of December 1st. Now, as always, we start with Bitcoin, and let's take a quick look at the price action over the last few weeks. As you can see from the chart, these are the two last trading weeks, the last one being the one that we are currently on. We can see that Bitcoin's price has been relatively muted over the last few weeks, although that could change drastically as we head into the last month of trading in the year. In today's dispatch, we're going to highlight three key drivers that could impact Bitcoin prices during what is left of the year. So let's dive right into those. The first driver that we want to discuss today is potential headlines or news flow from the collapse of FTX. Now, it's been almost 3 weeks since FTX stopped processing withdrawals on November 11th, but the negative headlines have continued to roll. On the same day that FTX announced that it was no longer processing withdrawals, BlockFi, a crypto lending platform with close ties to FTX, also announced that it would stop processing withdrawals. Just 5 days later, on November 16th, Genesis Capital, a large institutional lender, also announced that it would be halting withdrawals. These news have led to a series of headlines around mainstream media like the one you have on your screen around contagion. And it has also sparked fears among some consumers, many of which were still traumatized by the collapse of Three Arrows Capital earlier this year, which also led to other platforms having to pause withdrawals and ultimately entering into bankruptcy. Now, while the dust seems to have settled a bit over the last 2 weeks, yesterday the news broke that BlockFi had gone into bankruptcy. And this is the headline on your screen, or one of the headlines on your screen. Now, while many expected the news, it still added selling pressure to the markets as these types of headlines made their way through mainstream media. Now, the biggest remaining question mark in terms of potential news flow left for the year is the current case with Genesis Capital. Here is the article on your screen right now. Genesis Capital has currently halted withdrawals and its parent company is looking for financing to resume operations. And again, the headline reflects that it has hired a restructuring advisor to basically consider all options at its disposal. Now, while many industry observers speculate that Mr. Barry Silbert, who is the primary shareholder and basically who calls the shots at DCG and Genesis, should have no problem finding the necessary funding, recent weeks have shown us that anything can happen. And so, as if the environment was not complex enough already for Genesis Capital, Barron's reported last week that Genesis Capital was being probed by US regulators. And this is the headline that you have on the screen from Barron's. So again, this is one of the big question marks in terms of news flow for what is left of the year. And we'll discuss this a little more briefly in our What's Ahead section later today. Now, beyond the potential news flow driver, we also want to look at some of the macroeconomic headwinds that could impact Bitcoin as well. Now, for that, let's just switch over to the next articles. Now, as the U.S. jobs market and the housing market are starting to show signs of economic deterioration, the Federal Reserve is preparing to once again hike interest rates at its upcoming December 15th meeting. That is just a couple of weeks away. And as you can see from this headline, US jobless claims hit a 3-month high. And further on that, this is in the real estate side. This is a headline from Bloomberg from earlier yesterday, actually. And it basically talks about the US housing market entering a deep freeze with both buyers and sellers being sidelined. What we are seeing in the US economy today is akin to when the Fed was leaving interest rates at 0% and continuing to buy mortgage-backed securities and treasuries just over a year ago. And this was happening as the real estate market was rallying, with housing prices rising by more than 18% year over year, and unemployment was sitting at record lows. Again, this is the same, but in reverse. The Fed is continuing to hike rates into a deteriorating situation, whereas in the past, they were continuing to incentivize the economy as it was already roaring. So both cases are just too much. Now, to borrow an analogy from Pentoshi on Twitter this week, rising interest rates is like driving a car over a nail. Your tire may continue to run fine for a while, and you, the driver, may not even notice right away. But eventually, your steering wheel will get wobbly and your car will come to a full stop. This means that we should expect to see continued deterioration of the US and the global economy in the coming weeks and months as a result of the coordinated efforts by central banks to tame inflation, primarily Western central banks. So again, this is just goes to show that it is likely that we're going to see more negative headlines in terms of the state of the US economy and the global economy as a result of this coordinated central bank interest rate hikes. Now, the third thing we want to look at for Bitcoin is its on-chain indicators. Now, for that, let's pop up this chart courtesy of Willy Woo. Now, while the news flow and the macro outlook are playing against Bitcoin in the near term, the bright side is that on-chain analytics suggests that the bottom in terms of price could be near. The chart you have on your screen right now is called the Max Pain model, again, was shared by Willy Woo, and highlights that Bitcoin cycle bottoms tend to be reached when approximately 58 to 61% of the circulating supply is underwater. Now, according to this chart, we are rapidly approaching that level, and that range, again, according to this chart, is between $12,000 to $14,000 in terms of price for Bitcoin. Similar on-chain models are consistent with the 12 to 14K range as a suggested bottom, given the historical performance of Bitcoin throughout these cycles. This also marries, or this target and these types of ranges between 12 and 14K also marries well with the current narrative that US equity markets still have further room to fall. Given their current levels and the year-end estimates from top bank analysts, a lot of these analysts are basically seeing or projecting that the S&P will close near the 3,600 point mark when it is currently trading north of 3,900 points. So again, this narrative of Bitcoin potentially bottoming between 12 and 14K does marry well with this concept that some more macro and equity focused analysts have, saying that markets in general have a little bit more to drop to end the year. So in summary, the current setup suggests that it could be a rocky month to end the year. However, investor sentiment could turn early next year as the Fed reaches its terminal interest rates and basically tapers interest rates and stops tightening conditions further. So more on this in our What's Ahead section. Now, as always, we wrap up with what's ahead for the week. The week ahead will deliver 5 Fed speeches, including one from Mr. Jerome Powell himself, chairman of the Fed. And this is all happening ahead of their upcoming FOMC meeting on December 14th and 15th. They are likely going to announce another interest rate increase of approximately 50 basis points. At least that's what investors on the street seem to be targeting. And as they go out and do these speeches during this week, they will likely be trying to set the narrative for the upcoming decision as they do this upcoming roadshow of these 5 speeches. And we'll go into those in a second. Separately, The most wanted man in crypto is also scheduled to make a public appearance this week. Mr. Sam Bankman-Fried is scheduled to participate in the upcoming New York Times Dealbook event this Wednesday. Now, the timing for his speech is yet to be determined, but you can certainly expect that there will be lightning speed coverage on whatever is said during this appearance. Now, the wild card in terms of news for the weeks ahead will be the outcome of the Genesis Capital and Digital Currency Group situation that we discussed just above a few minutes ago. While the headlines around this have been drowned over recent days, this will no doubt make headlines again as soon as a decision is announced, and regardless of the outcome. Now, a positive outcome should bode well for Bitcoin prices, and vice versa. A negative outcome could add selling pressure to Bitcoin as well. Now, here is a summary of the events and data that could move markets in the weeks ahead. As I mentioned, today, Tuesday, we get the S&P Case-Shiller Home Price Index. The previous read for year-over-year real estate prices in the US was a drop of 9.8%. Very likely we're going to see another drop again for the month of October. And this is something that the Fed will start paying attention to as, again, we mentioned, the US real estate market and labor market continues to deteriorate. Is something that the Fed can ignore for the first little bit, but eventually has to pay attention to these. Now, tomorrow, Wednesday, we get 3 Fed speeches. 8:50 a.m. we get Michelle Baumann, Fed Governor. 12:35 p.m. we get Melissa Cook, another Fed Governor. And at 1:30 we get the granddaddy of Fed speeches, which is Jerome Powell, the chairman of the Fed, will be speaking at the Brookings Institution. Still timing to be determined on Sam Bankman-Fried appearance at this New York Times Dealbook event, but we will keep an eye on this. And again, certainly the media will be publishing any kind of headlines and reports as soon as this event starts and he opens his mouth. Now, on Thursday, we get a read of the U.S. unemployment market with initial and continuous jobless claims. Again, these numbers have been trickling higher, and the Fed will certainly not be able to ignore these for much longer. And also 3 p.m. Thursday, we get another Fed speech by Michelle Barr. Now, Friday at 10:15 a.m., we wrap up the week with another Fed speech. Mr. Charles Evans, another Fed governor, again, 10:15 a.m. And with that, we reach the end of today's show. Thank you once again for tuning in. If you enjoyed it, if you liked it, we welcome you to thumbs up it, subscribe it, and share it with your friends. And if you also are not a Ledn member yet, I welcome you to check out Ledn.io and learn about the services that we offer. Thank you, everybody. Have a wonderful week. Los quiero mucho, and see you next time.